Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, let's take a look again on the gold market. Today guys, we take a look at the first at the very short-term perspective that we discussed on Friday. We talk about the possible pullback. As we said, non-farm payroll is if you will get the bad numbers and low inflation, be prepared for a pullback. That has happened. So at the same time, you can see on the gold, the overall pullback is not as significant as, for example, on the euro. On the euro it was significantly strong action. And here it was the action that stands right now still even below the nearest 1890 in the first fib level. It means that in the beginning of the week, if of course we wouldn't get any surprise on the Monday's open, we could consider the same bread butter trade that we suggested initially. So I think that we could start the week from this pattern. If you remember, our trading plan that we discussed on Friday suggests that if market will hit the first level directly, preferably with a 3 closing above the 3x3. Here we have a bit more. You can see 4 closing is 1, 2, 3, 4, but actually it's not really very important. We could try to get the short position with the at least with the pullback to the 18 even. So here is the potential small trade. Theoretically, gold also could proceed lower based on this bread and butter, but we have different trading plan for the euro. On the euro currency, we expect that upward action could continue a bit more. And a bit later, I will show you different charts of the longer term perspective. You will see that better to focus on the minor target because indeed, as gold market, as euro currency could show a bit deeper retracements. If it wouldn't show even the short-term reversal. That's also possible. That's why initially I think that we could consider just minor trade here, short-term trade starting somewhere around 1890 with the target approximately around 18 even. On the hourly chart, we also have the picture that in general confirms this type of trade. You can see we have the good ABCD pattern that stands in progress, and its OP stands precisely 1890 in agreement with the conference resistance on the hourly chart. That potential for taking the short trade. This overall price action here stands gradual. It's looks nice. We do not have any thrusting upward acceleration here. It's that's actually the action that we would like to get when we plan to take short position in some conference. As I said, hopefully we will not get some surprise on Monday open. So we will not get some thrusting breakout or price open right above this area. In this case, of course, we should not take any short position, just see what will happen next. That's what about the short term. Speaking on the long term on the gold market, so lots of questions on the forum what to expect in the long term, whether gold is turning down or it could go up, and what in general is going on. Yesterday, in a weekly report dedicated to Forex market, we have talked about the dollar smile theory. This is not new subject. Actually, those of you guys who read our Forex course that I have written in 2011, there was the starting point of the dollar smile after the crisis of the 2008. And we were spot on the forecasting of the starting of the dollar smile. I have put the link to this article in the book, in a weekly report, in this weekly report on the forum. In two words speaking, the dollar smile is a type of behavior when in relation to the economy cycles. And it suggests that after recession, gold starts rising on the background of the global recovery, and the recovery in the United States in particular. And some hedge fund managers suggest that we stand at the eve of this possible rally. As you understand, the dollar smile, which suggests the dollar appreciation, brings nothing good, nothing positive to the gold market. But here we have to make some remarks. First of all, dollar is important to the gold, but it is not as important as interest rates. So it makes all this stuff, of course, linked to each other, the dollar to the interest rates and the gold. But dollar have the dominant importance to euro currency, While for gold, it's important, but through the impact on interest rates. And definitely the drop of the dollar is a supportive factor for the gold. It's a backwind to the gold, but only if the interest rate supports this dynamic on the dollar. So that's why here to some things about long-term perspective on the gold. Take a look first at the interest rates that we have. That short-term chart. This chart you probably know very pretty nice because this is actually our interest rate chart that we're trading and taking a look at every day. This is daily picture. I will drop to the forward time frame chart and explain better. So this is for our time frame chart of the interest rates. That's the rally that has pressed on the gold in this week, and you can see the reaction hidden for some time in this dollar index. So and this here you can see the no reaction has happened actually on interest rates. That's potentially, well, this is potentially bearish to the gold because interest rates hasn't dropped back on the non-farm payrolls data. At the same time, you could see the performance on the dollar index that repeats the same shape as actually interest rates. So you can see the same ABCD type of action. And actually, dollar index here shows just ABCD retracement. So you can see drop, long-term downside action, and this ABCD pullback. That makes us think that a performance, upside performance on the dollar might be over in the short term, and it could turn down again in the nearest time. What impact on the interest rates will be? It's difficult to say, because if you will take a look now at high time frame on the dollar, on the daily chart, you could see that the period here they act together, but here, despite the rising or dropping of them, dollar interest rates continue climbing up. In particular, this performance of the interest rates hold gold in a flat action. It doesn't let them to grow, despite that dollar was standing on a downside trend. With the interest rates flat, gold probably would show the upward action, but with the rising interest rates, gold was standing flat. That explains why dollar has no direct and decisive impact on the gold, only through the prism of the behavior of the interest rates. This is important because next chart that I will show you mostly stands in relation to the dollar. So now, why we think that dollar could show downward action. Here you could see on the long-term chart this example of the dollar smile. This is first stage when we discussed in my book. I think I've written in 2011, particularly at this point, we make the prediction on this action. Now, hedge fund managers suggest that we stand right at the eve of the starting of the new dollar smile. And the reason why we think that the dollar could drop a bit more, but it stands twofold. First of all, we have perfect ABCD pattern with the OP around 87.30. It's not completed yet. Second, we have the bearish grabber on top that suggests the taking out of these lows. That means the same, that dollar should drop to the 87.30. It suggests downside action on the dollar that should become the backwind for the gold. And from that standpoint, theoretically, gold could show deeper upward action. So it means that gold keeps chances within the couple of months, as I said, it's February, March, to show the positive performance. But degree of this performance strongly depends on the response of the interest rates to drop on the dollar. If interest rates will not dropping and stands flat or continue rising, the upward action on the gold could be muted, or it could be some flat action, some additional volatility, but not direct straightforward action. If interest rates by some reason turn down, maybe it will be some data release on next week, for example, CPI or something of that sort. That will be really big support to the gold, and it could show the last upside effort. I just warn you that if you will see a rally on the gold above the 19, about 1950, it doesn't mean that we're standing in a new long-term trend. This is just a swan song of the gold. Degree of this swing song, how high gold will reach, it depends directly on the interest rates, despite that the dollar will dropping. But in general, this will be supportive to the gold market. And once this will happen, so we expect that it could be this one. That totally corresponds to our fundamental view. As you know, that we suggest that in April and May, the major shift in the global economy should become evident. So currently it's a bit hidden, not everybody understands what's going on in the markets. But we think that really could be this type of action, somewhere close to the summer. Here it's showing beginning of the May, but this monthly chart, guys, that's the thing. So that explains you what to expect on the gold within the couple of months. This chart suggests that yes, gold could show the upward action, but the strength and levels that it could reach mostly depends on the interest rates, despite that the dollar will start dropping and will drop a bit more, we suppose. If in the most positive scenario, I suppose that gold could retest the 2000 top. More probable that this will be somewhere maybe around 90, 90, 50. This is the average expectation on the upward action if it will happen. But after that, this major reversal really could start. So that's our view on the gold market. I suppose I will not was too boring to you to listen to this stuff. And let's keep watching what will happen on the next week, starting with our bread and butter trade.